Ladies and gentlemen, welcome to the Big Tech Frenzy. In today's video, guys, we have a lot to discuss. I mean, boy, oh boy, has it been a bullish market, but it's at times like this where I start to get a little bit, you know, anxious. So I want to talk about some of that anxiety with how much, not the market is running up, but individual names within the market that might be running up just a tad bit too hot here. And do I think that that level of success is going to continue to happen at this rate? That being said, I'm also going to talk about what I'm going to do with that additional capital if I do start trimming some names, where I'm going to rotate it into. Promise you guys, I'm not going to keep it in cash. It's just not my strategy. So let's get into some of that conversation. First off, I kind of wanted to talk about SoFi to start. There was a couple interesting pieces that actually the SoFi Insider, which they're back. I mean, I'm super excited to start seeing some of this DD that more of the community can end up finding. So that's absolutely great. And one of the things that they ended up pointing out was that SoFi is actually up 20% on their Trustpilot reviews. Okay. So they were just counting the Trustpilot reviews throughout 2024 and 25 and seeing quite the massive increase in Q3. Now, this can be sort of a gamed statistic. Trustpilot reviews are larger whenever the fintechs actually promote it. Large banks, they only really see Trustpilot reviews whenever people are disgruntled ex-customers. Then they will end up putting it out to tell other people, to stay away, to try to harm that business because they have been harmed by that business, something along these lines. That's not the case for SoFi because SoFi says, hey, we have a 5-star review on Trustpilot. After they run a loan, they say, hey, maybe consider writing us a review, these sort of things. But still, in the general purpose of things, having such a large increase, such a large bump after being on Trustpilot for many years is very exciting to see. By far their largest quarter that they've ever seen for reviews. It's up quite a lot comparatively to other quarters. All I'm seeing, call it anecdotal, let's call it confirmation bias. Maybe it's what I wanted to see today. But boy, oh boy, does it look good. I mean, come on. Next, after that, SoFi Insider was actually going through some comments from Freedom Capital Markets chief marketing strategist Jay Woods said that SoFi could be a potential acquisition target. This is just someone's opinion, but I do like the sort of sentiment here and what they said about it. I've never heard this saying, so let me just sort of try to translate this here for you. He said, I could see someone paying $45 to $50 billion for a name like SoFi. They have a young user growth, young user base growth that could make it attractive target. And Jay Woods also said that the bank is known as a stadium company, often associated with stadium naming rights that have been historically places that have been ripe for acquisition. I didn't know that. I've never seen that as a trend, but maybe that's a thing. 45 to 50 billion. Who would like that price? We're currently at 30 billion. I definitely wouldn't want a 50% increase in the stock. I don't think that's remotely enough. But yeah, B-dubs, what's up, brother? How you doing? So let's quickly talk about Robinhood really quick, because everyone's making an unbelievable fortune on Robinhood. Congratulations to all shareholders. It's just insane. They are, and I mean, truly showing off some very significant growth here. In the last year, we're up 550%. But in no way, by the way, is the financials looking like they're up 550%. So now we're starting to see some pretty aggressive multiple expansion. Alongside that, we're also seeing, one of the most excitable bull markets that we've ever seen, at least in certain areas, right? It's still, some people would say, the most hated bull market because there's a lot of sectors and a lot of investors that are still not participating. Absolutely, that's true. Um, but we also see things like the highest level of call options, where we're seeing unbelievably high call option volume. It's at record highs. So these sort of stats that we end up seeing does push people to believe, hey, is this stock being pumped up on what could be a trading frenzy? And if that slows down, what does that look like for the stock? Now, overall, I don't think anyone is suggesting that they are going to lose market share or anything along those lines. I think that they are going to continue to just absolutely take market share, transition new customers from Schwab over to Hood. The size of those customers at Schwab are on average 30 times larger than Robinhood's customers. 30 times. So each individual customer that you can get over for their full suite of financial services products, get into institutional trading, get into employer-based trade, or the funds that employers have with their employees. There's so much growth left to go. But how much of that is being pulled forward? Now, see, the quarter that we're about to see is probably going to have somewhere on the lines of 90% year over year growth from a revenue perspective, and probably even higher than that on an EPS perspective, because the margins are like ever increasing. So that is very exciting. But on the same breath, Q4 that ends up coming out, if we actually take a look at the numbers here, bear with me one second, but the Q4 statistics are a much harder comp. I mean, they're not going to be able to hold up a 90% growth rate forever. So at what point does the growth rate settle out at, and what is Wall Street looking for, essentially? Now, I've got a couple things to say about that, but let me zoom this in so you guys can see. Right now, even if we get like $1.2 billion in revenue, roughly 87, maybe 90% growth rates, that's off of Q3 of 2024. That was growing at 36% at the time. But the next quarter, it really starts to get aggressive again. These were some, nearly $1 billion in revenue. In order to get that 90% success rate, we're almost needing to clock in $2 billion of revenue. Is it plausible? Mike is breaking up. Can you guys hear me? Is the audio okay? I only see it from one person. I was coughing, that's for sure. Audio is perfect? Okay. Yeah, things like not liking the prediction markets and stuff like this, I actually am not in favor of. Like, if their customers are happy with that, I'm happy with it. I don't think that the best stocks in the world are the most moral companies. Sure, obviously it's greater to, or it might be beneficial for both sides to end up picking companies that are also, of the stance of get your money right. But if I thought DraftKings was a great pick, I would pick DraftKings. I don't have a personal pick on that, but I also don't judge people that have those reflections in their portfolios. I mean, there is, all types of moral or green or sustainable or halal type portfolios that people can have. I don't really have a strategy in my portfolio other than maybe tech. If it's not tech, I'm anti that. That's my investing philosophy for the most part. And even then, I break that all the time if I see a business that I can fully understand and I think is undervalued. But just going back to it, I do wonder, and I'm starting to, as we continuously get these 5+% days on Robinhood, I'm like, man, is there another name in my portfolio? And I do not need to look far. I'm not looking for the next Robinhood. I don't think that that's the play here. But as I look to companies that I currently hold, I currently understand, and where I place price targets or where I think that the growth should be, fair value, Robinhood has completely surpassed that number for me. But other names in my portfolio haven't. Okay. Now, it's still a growing percentage of my portfolio, so I don't want to completely get out of Robinhood. But if it continues to keep up this level of growth, I wonder if, 20% of my Robinhood gains or something like this should actually be shifted into SoFi. I don't know. I'm also fully aware and I hope you guys are too, there will come times where we will end up getting dips on Robinhood. Just like Liberation Day, the stock market had fallen a certain percent, Robinhood nearly got cut in half. So whenever there is a bull market, Robinhood is that levered bet on a bullish market. On a bearish market, it is just as levered. Okay. And at a multiple like this, it's going to be very levered. So people are going to really pull down hard on the sell button or on the sell lever, I guess. That's what I was going for there. Because not only will the multiples contract in a bearish market, but then revenues and earnings will likely contract. So if you have both of that's like a downward S curve, right? You have multiple headwinds that are facing the business. And during a bear market, or sorry, during a bullish market, it's very hard to remember how things can get bad for fintechs and brokerages like Robinhood. So how do you balance that risk? One, you obviously you bet long on the companies that you think are going to go up, but you don't give them the multiple that you would to a Palantir or a Tesla or some of these other companies that are not as cyclical as Robinhood. So as it gets extremely highly priced, I think it deserves to be triple digits. Okay, but now we're 45% above $100. Now it's like, okay, every dollar higher requires some new story that is end up tacking onto this business. But I also felt this way about Palantir half the price ago. Like that's my problem. I don't like to hold companies into completely euphoric pricing. I don't think Robinhood is there right now. This is not euphoria, okay? But it is getting into those territories. And that is hard for me to justify. I just got a tickle right in the back of my throat, right here. Hood's market cap is 100 billion more than SoFi. Is that true? Yeah, I mean, it is. Hey, there's not much debating which one is in first place. It is Robinhood, right? Whenever we look at the revenue that each one of these businesses had a couple of years ago, SoFi was in clear first place. Now it's looking like over the next few quarters in a bull market, SoFi has them beat. Okay. But if you go and look historically, SoFi's business has gone one direction. They've made a certain amount of revenue, and then that revenue has slowly ticked up over time. Robinhood's has tracked the market. It's just been very bullish. And so if you start to believe that we are in a straight bull market between now and 2035, Robinhood is an amazing investment. Okay. But even then, I mean, it was a much better investment whenever it was, sub $50 a share and we were all pounding the table. Now it's much harder to buy. We're very much, as a community, I find the people that I talk with, the other people that are buying into the Robinhood story and Vlad's story is much more of a hold. I don't even think Amit is buying at these prices. And I think last time he bought was like 135, 138, something like this. At some point, you have to go, okay, you know what? When fear and greed starts to tip too much towards greed in certain sectors of the market, that's the problem, right? It's not the entire market. So the entire market, we're not in extreme greed for the stock market, but in certain sectors right now, it does seem like things are getting a little frothy. That's all I'm stating. I told y'all Hood's going to 200, and it might absolutely. But what does it look like at 200? Is there a reason to justify that multiple? Is there a comp that even looks remotely like it? Is the growth going to follow that? Like, is banking going to be a slamming success along with prediction markets and international and all of these things? But those, to some degree, I think, like, I'm pricing those in. I do think they're going to be huge. I do think we're going to hold up unbelievable growth rates, 40+% growth rates going forward. Like a level of competency from management that, like, I'm super excited to give them a premium. But we were at a premium at 70, So I don't know. I I haven't sold a dang share, loving every bit of this move, but at some point I have to go like, how many more of these 5% days are we going to get? And if there is some sort of problem in the markets, if there's a, like there's step ups of talk around, conflicts again, because potentially Donald Trump's helping out with the Ukraine Russia issue. Now, I don't want to act like I'm remotely an expert in that field at all. I do not follow it. I just read the headlines. So if I'm completely off, I don't know. But if something does happen along those lines in a macro shift or macro change that spooks the markets, Robinhood is going to be first on the firing squad. I mean, it is true. Wait for Singapore. So I'm excited for Singapore, but what do you think Singapore is going to do? You think it's going to double their business? I mean, hopefully they end up seeing 1 million users in the first couple of years of them being in Singapore, right? Like total international customers that they have is 100,000. That's including Robinhood crypto, which is essentially worldwide. In many parts of Europe and UK and here in Canada with Robinhood Wallet, all of those, we're at like 100,000 users. um, yeah, Google it. I'm not talking about the population. There's no Googling their ability to have localization in those areas. It's not something to Google. It would be pure execution, the same way that Robinhood UK's execution or SoFi Hong Kong or some of these products. Just because you enter a market doesn't mean you deserve it, right? So, for example, SoFi is in Hong Kong. No one cares. They don't even talk about it because it's that little of a success for them. So I'm excited, but let's not get overly excited because things are frothy. The same reason that whenever I go to buy a SoFi and it goes from 7 to 30, and then people tell me, oh, it's going to be 85 by the end of 2026. I mean, I hope for that too, but that's not the base case that I'm placing on. I hope for that, but like, where do we price in risk? Where do we price in a downside? Investing right now, whenever everyone is making money and showing off unbelievable growth rates, it's entirely in a bullish market. But to be a true investor through all cycles, you need to have some awareness of what's going on in the general markets, if there is froth. So I'm not calling a top here at all, especially in the broader markets. But there are individual names that look expensive. And I'm happy to be an owner of an expensive name, but Robinhood looks expensive. I don't know. What's another thing too? I'm loving what's happening in crypto. There's so much broad move in crypto, and everyone's getting very excited. I hear this all the time, like, Robinhood, Coinbase catching a massive bid on cryptocurrency movements. It's not even happening on their platforms, really. Like, retail is not participating in the crypto purchases. It's institutional. So that's the thing that I find tough as well. It's like we end up locking in maybe sub 10 billion in transaction-based revenue for crypto in September. There's a difference between the narrative of crypto and what is actually being found on Robinhood's platform. And I get a lot of people who can justify the growth of their business over time, but then people try to justify certain valuations and saying, hey, you know what, 200 by end of year. Trust me, bro. And then the sending a single word for your due diligence, which is just Singapore. That's not enough for me. Sorry, BM. Love you. Appreciate you in chat every day. But like, we have to acknowledge it is frothy. Sip of coffee. Extra large, McCafe, 7 p.m. BM also says drink water. You know what? Appreciate you. Robinhood's going up because it's going to be the one-stop shop for gambling. I think that's fine. If they want to if that's what they want to be, and people find them for prediction markets, I don't care. Like, I don't think people have to get rich on Kalshi or Polymarket or some of these businesses in order for them to be a successful fintech, right? People can differ on me with that, whether that's a moral choice or not. But like, I think Robinhood is trying to give people the platform to choose what they want to do with their money, and they're not making decisions for you. I think that's perfectly fine. So what was I going to say? Oh, another thing too, the prediction markets statistics recently that I saw from, was it Piper Sandler, said that there was a $200 million run rate for Robinhood right now in the prediction markets. It's less than 100 million, because right after they posted it, which was based on their channel checks and third-party data, Robinhood then put out the real data, which is, there's zero bias to it. They did 2 billion contracts in the Q3 timeframe, which is $20 million. The annual run rate of that is 80 million. Let's say they're off by a few, billion contracts, whatever. Maybe you get to 100. That's half of what they were assuming for prediction markets in what is one of the most explosive times for sports gambling, where all the sports are starting to start back up. DraftKings, all of these other companies are all seeing spikes in their growth in September. But those same companies also see drop-offs throughout the year. So while people are seeing a big pickup in prediction markets, and I do think, remember, I'm just being devil's advocate here, okay? There is a pickup now, and I think that more and more people will use Robinhood's prediction market over others. I agree with that. But some people's predictions and just throwing out certain numbers of where it's going to get to, and this is going to be, $1 billion+ business line for them. There's no data to show that yet. There's not. Like, options, maybe this year will be $1 billion segment for them. A $1 billion segment is freaking hard to break into. That's hard. Look at Hood versus Schwab on a market cap perspective. Yes, but they have the assets under custody is not even close. So here, wait one sec. Charles Schwab's $168 billion market cap. Hood is at 130. So the $30 billion difference. Now let's quickly see what is the assets under custody for Charles Schwab. We'll see. The market cap's 30 billion off. But how that's the part that scares me, BM, is that if we close the gap to Schwab and we become the largest brokerage and we're $170 billion, first off, what's the percent gain from here to get to 168 or 170? It's not that much. What's the downside to correct back in a bear market? A ton. Okay. I do think that the fast growing companies like Tesla can be much bigger than the companies that are much larger than them. They have to show that growth. I think Robinhood is doing that. Okay, but there's a certain There's a certain buyable range in there. It's not like Robinhood is coming out and building robots and starting new energy companies and stuff like this. So all I'm saying is if we continue on this trajectory of finding more and more 5+% days where we get to 150, 160, where do we start taking off chips off the table without seeing an accelerated amount of growth to the next, size of their business? Let's see. I say we all the time. I say we whenever I'm owning a company, but yeah, sorry. Okay, what's Robinhood's assets under custody? I think it's 300 billion. Charles Schwab's at 11.23 trillion. 11.2 trillion. The 0.2 is closer to Robinhood's total assets under custody, let alone the 11 trillion. Like, you know what I mean? Like, there's a lot more 100% growths that are needed. And I think they're going to close that gap. Don't get me wrong. But there is a price to pay for growth. And those are the names that get hit the hardest. The companies that caught the largest bid whenever things do go wrong. And guys, I promise you, maybe I'm the adult with a head on his shoulders here, which I'm usually not. Things do go wrong. You know? 11 trillion got to be as big as some countries. It's as big or bigger than almost every single country. I think there's only a few that are larger than 11 trillion, but yeah. We don't need facts here, Tanner, only vibes. I mean, to some extent, I agree. I agree with you. What is the next Nvidia? Yeah. I mean, their business is bulletproof. That is true. Like, I'm not anti-Hood at all. Like, as long as they continue to keep their earnings like fee-based, and they don't take on more risk, like potentially they could with the credit cards and stuff, you're just a toll road. And doesn't matter whether people are going long or short a position, doesn't matter what they're doing, you're taking a cut of that pie. That's amazing. But yeah. But it's a high premium. It is. Okay. Let's move on from the Hood talk. I've given my perspective. I do foresee, especially SoFi, still below $26 today. I think they're going to have a phenomenal time, and people are disrespecting this name, and they're giving every single advantage to Robinhood, right? Could there be an outperformance on SoFi stock? Don't rush to say no too quick, because this happens a lot in growth companies where Tesla can find an unbelievable run up, and Ford, the company left behind. And by the way, SoFi is no Ford in this equation. But SoFi is like a Rivian, right? They're a good competitor. They're not growing definitely as fast as, by the way, I don't even agree with that assessment that they're Rivian. They're much more built out as a financial company than Rivian is a auto company. Anyway, all I'm saying is they are definitely another tech company. They're not quite a Tesla the way Robinhood is, but the premium that they're demanding is completely not there as well. So, no, I take back the Rivian comments. I'm losing views here, just even making it. But all I'm saying is their growth rates and their margins are worse than Hood. That's not an opinion. That's a fact. Okay. But where are we going in the future? There was a time during Tesla's growth where they had run up so much during the pandemic an insane amount. I think they like 10x'd in a very quick period of time. And Ford was essentially flat through most of that period. Then over the course of, I think, the next 2 years or so, Tesla was relatively flat to down, but Ford just kept on trucking. Should I start trimming or look to trim Robinhood in this immense amount of strength to buy names that could even be in the same field that are not catching nearly as large of a premium? Maybe. And shout out to the only company that I did end up buying today specifically, which was dLocal, because it will end up seeing that growth, and it's just being completely disrespected. So if I can catch a company like that below $14 per share, I'm going to do it. You became trash, Tanner. My bad, dude. My bad. Not Rivian. Not Rivian. Sorry. Some of you guys will just judge me based on the things I say. Like, that's how AI creators are going to take off, is whenever you just want me to say the things that you want me to hear, go get Grok to create you some waifu to tell you that SoFi is the end-all be-all of stocks. But the truth is, there's other names in the world, right? I love SoFi. I'm actively telling you guys that I'm looking to add more, and you're like, how dare you? Okay. But if you just look at the statistics, it is not growing and does not have the margins that Robinhood has. Genuinely sue me. Okay. Okay. So BMNR, that's another one I'm buying. Okay. Because, well, I do think some names are getting hot. There's one name that is not getting hot at all, regardless. Like, I think Ethereum's growth is unbelievably huge. Huge. Like, the pickup here, we're going to 10x. We're going to more than 10x on the amount of transactions on chain for Ethereum. That's my big belief. But we're not seeing that reflected in the stock price. This 10x has been reflected as much of going up as much as like 10%. So how do I play that bet? I've been making a lot of videos on this lately, but BMNR is one of those ways that I think you can capture essentially a levered bet and taking advantage of a larger pool of capital that is actually going to acquire Ethereum cheaper than I ever could, stake it at higher rates, find other pools or other ways to, find a yield that I wouldn't be able to do as efficiently as them. And, buy onto Ethereum and take advantage of the world going on chain, essentially. But you have to believe that finance is going on chain. If you believe that, then you can definitely see the BMNR picture. Guys, I see that Bloom Energy is up, but I don't know anything about the name, so I don't know what you guys want me to say about it. Okay. I want to short Bloom Energy now. Why? Because people in chat. There's going to be a lot of speculation in markets during these times. But it's interesting because it's not, across the board, this just euphoria in markets. There's a lot of things not catching a bid. Well, deep dive on it? I don't want to. I don't want to. I think that there's much larger names that I want to look into than Bloom Energy, and that's perfectly okay. You know, I'm actively looking into BM&R. I'm looking into D Local. I'm looking into a bunch of companies. You're lazy, Anthony. You should go start a YouTube channel, brother. Okay. Is PayPal worth holding or sell it? I guess with or at a loss. PayPal's interesting. I don't know. I really wish that they gave higher guidance than what they're currently showing. And they've sort of stuck to that, and they haven't proved that their guidance has been too, like conservative. They're not doing what a SoFi is doing, where they're being conservative, but then crushing earnings every time. So that's my problem. To me, it's, even though it's sold off so much, it's still so much a story stock. Like, they're signing a ton of partnerships. New companies are coming to PayPal World. Venmo's looking to be great. They keep adding new products. It's doing phenomenally. But then whenever earnings come out, it's just not what I hope to see. So I'm just sort of on the sidelines with PayPal. I wish it was so, like, I see it's number 1 in the App Store. I see Venmo's number 2 in the App Store. These are phenomenal signs to me. But it's like a fool me once, fool me twice type thing. What do you think about getting into BM&R tomorrow morning? I think if you are a believer in what's going to happen in Ethereum, like, we're $4,400, right? For every, essentially, the back of the napkin math is, for every $2 secured on the Ethereum network, the Ethereum goes up by $1. So, what's it called? If I were to look at, the $500 billion market cap, or just over, on Ethereum, facing off against a $700 trillion total financial services market, all of that of which probably has some use to be on chain, and there's, network effects there. It's not all going to be on Ethereum. I think there's going to be many, many winners here, but I do think that Ethereum's going up. If it's going up, the treasury companies that are holding it will inherently go up. Coinbase will go up. Many of the crypto names that are associated with cryptocurrency will go up. Picking those exact right winners will be hard. But yeah. Who in their right mind is thinking about taking profits at the start of October? But, that's like saying, who in their right mind wants to stay long through, the terrible September? And then September ended up pumping a ton. And then we ended up, breaking that thing. So I think those trends of certain months are good and bad for markets is a trend, but it's not a yes or no. Meaning, I'm not tying my investment strategy to what the months tell me to do. I'm not an astrologist. I like looking at those. I mean, it is interesting, but it doesn't mean that companies will endlessly pump higher. But I'm not looking to sell. I want to be 100% in markets. I'm a believer in bullish markets in general. It's just some things, individual equities. Like, for example, Jeremy Lefebvre is getting picked apart online. I think it's so overblown. He's talking about taking short positions in Tesla, Palantir, and potentially Hood. And he did that with roughly about 1% of his entire portfolio, which, like, put it into account, he's not full porting, shorting these names. And, people are tearing him apart for it, but it's like, I don't know. I don't think that it's the it's the best thing to do. I wouldn't ever short a name. I think that you're just like companies have a much higher likelihood to go up than down in any market almost like just stocks go up in a way. Um that said though, um Tesla looks extremely expensive, Palantir's doing great. It looks expensive, and Hood is getting into that expensiveness. Being up 550% in a year is quite the multiple expansion. I would never short Hood. I would never short any of these names, just to clarify all the statements I'm making. I'm looking at entering SPGI, underrated as a data and tech play, and valuation looks great in the market, down year to date, stable but growing well. Thoughts? I think I have this in my community portfolio, but no, I don't care about S&P at all. Yahoo reporting 15% corporate tax on unrealized crypto gains being removed. Bullish for BMNR. Great update this week, by the way. Thank you. I actually didn't see that. That would be, great. Yeah, it definitely would be bullish for BMNR. Any bettering of crypto legislation will be amazing. Yeah, do not short Hood. Yeah, no, 100%. I would not. MicroStrategy, what about it? I wouldn't short that either, but probably good for them as well. Let's see here. I think there's a lot of very strong businesses. I don't think that means that there's upside. You know, I like disruptive tech. I don't like buying a lot of legacy names unless something stands out like really strongly for me. I love buying the names that people undersell, if that makes sense. Are you heavy in Tesla? No, I don't have any Tesla. I was heavy in Tesla, but it got to a price that was just way too expensive for me, and I ended up selling that. Um, yeah, sorry, I don't have any love for S&P. I don't track it a lot, and yeah, sorry. I don't have the broadest range of names that I cover. I sort of have like um, a list of maybe 20 or 30 names that I try to know very well. And sometimes someone will shoot something across the desk and I want to explore it. We look at a new name every Friday, try to. So that's how I found D Local. We did Shift 4 last week. We did what were some of the other ones? Uber. This week, I don't know which one I'm gonna do. I think I don't want to give out anything just yet, but yeah. But it might be something like Mercado Libre or something. That might be a fun one to do. I think we did PayPal already. Tanner, D Local or Shift 4? That's hard. I guess it depends on the type of investor that you are. If you're okay with buying a non-US name and are pricing for growth, like you want a new name that's even cheaper, DLO is great. But Shift 4 is that American name. They still are growing very well, but yeah, not quite as great of financials as maybe D Local is seeing. I missed your Uber video. How long ago was that? I don't know, maybe a month ago. Uber's a great name. I think that there's so much to be said on Uber right now about the idea of like full self-driving vehicles, that utilization rates, the difference between peak hours versus really, really slow hours. How does a company like Waymo handle that themselves? How do they find the customers and the additional cars to end up servicing that type of need? That's the really good thing about those human drivers, is like some people can just do it part-time, and so they end up going to work just for a little bit for peak hours. If you have cars that are coming out purely to do robotaxi, you want them driving the full time and not parking on off hours. And then you're competing and spending a lot to find users and everything, whenever Uber can just guarantee you utilization rates. So Uber's quite exciting in terms of just having the network effects to offer to new self-driving cars. I think self-driving is going to be a complete commodity, like 100%. I don't think if they can crack the code, which once Nvidia or some of these companies can end up delivering that level of code to say, hey, you know what? If you use our chips and you place these cameras here, we can offer you a full self-driving ability, which Nvidia will do. At that point, I think the cost per mile just falls to an absolute zero. Well, not zero, but to just sustainable enough. And there will be very limiting factors between different companies. Which one has the nicest leather seats or more leg room or something like this, I think will be small ads. So in that experience, what are you going to have 20 different apps on your phone? Probably not. You're probably going to have a few. Tesla might be one of them, just because they have such a differentiated experience. But Uber might also be one of them as well. AMD $200 soon. I don't even know where they're at right now. But by the way, give a quick hand to to an Nvidia shareholder near you. Another all-time high, 191.05 today, which is just insane. I think we get above $200 a share easily on Nvidia. AMD, obviously, it will happen eventually. The semi market in general is going to come for AMD as well, but I don't know if they can compete one-to-one with Nvidia. Go to Asia, only have Grab. Yeah, but Uber owns part of Grab. That was part of them taking the equity stake and leaving Grab alone. But I'm mainly talking about North American markets, which is, sort of the Tesla versus Uber conversation. But Uber's worldwide as well. I mean, they've got hundreds of millions of users. Nvidia is cheap looking at a PEG ratio, right? It's insanely cheap. It's so funny. Even if you use Wall Street's estimates of what they think the growth is, which Jensen says those consensuses are extremely conservative. So if you believe him, it could be even better. Government shutdown is projected to last 29 days on Polymarket. Yeah, I wouldn't worry too much as a stock investor. It doesn't usually affect markets. But yeah. AppLovin is more likely to reach Nvidia than AMD. I don't think that, but AppLovin's going to be an insane name as well. That's another one on my list and actually in my portfolio, but a very small percentage. Okay, let's get back to the news because we have so much to talk about. What's really funny is we were talking the other day about Sora 2. This is OpenAI's model. we're talking about Nvidia getting to new highs and stuff, so this is important. I said, hey, eventually you're going to be able to get to a point where you want to watch your favorite movies and say, hey, you know what? I don't want this actor. Can you put this actor in? What would this ending of this series look like if this happened? Blah blah blah. You can create your own worlds essentially. And then this ended up. Oh, sorry. This ended up coming out from Sora, where people were putting Pikachu in Saving Private Ryan.
Private Pikachu, stay low!
Pika! Pika!
Switchman, you need that nest cleared!
Isn't that crazy? Isn't that nuts? Like, it's just insane. Pikachu and Saving Private Ryan. But that's the world that we're going to eventually come to here, is that like these sort of videos are going to become normal stay, whatever. They're going to be in the live streams. They're going to be in small tidbits. I don't think it's going to remove that human aspect, but the things where you don't really get a human touch, it's not going to matter for it to be replaced with artificial intelligence. Offers zero value. I don't know about that. I mean, that specific use case, maybe not, but like, I think graphic design and like a lot of that sort of 3D artwork and stuff like this, companies and movies and all of these things spend millions and millions of dollars to captivate audiences even longer. If that could be done in a single prompt to fill parts of movies in different areas, I mean, like, we're talking about incredible abilities to speed up the production of movies, entertainment, gaming, like all sorts of content creation, and lower those budgets. I don't think it's completely useless. Let's see. Any reason why there's no designated section in the Discord for BM&R? I think that the conversation around BM&R is the same conversation around Ethereum. That's really what you're going to be talking about. So we have a crypto section in the Discord. I don't know why that has to be separated. Maybe the difference between Bitcoin, like other altcoins and stuff like this, and Ethereum, something like that makes sense. But I don't think of BM&R too differently from Ethereum. You can post your BM&R stuff alongside Ethereum. I think it fits in well. Okay, let's see. If the graphics become indistinguishable from real humans, would you think it would matter? No, I don't. If people can't tell the difference, not in a movie or sci-fi or something like this, but I do think it would matter in this type of experience on a live stream, these sort of things. Because at the end of the day, like whenever we do meetups or I go to these events, I am a real person, you know. I don't know. That's hard to communicate, but I think some of those AI stuff, I'd be a lonely man if I wanted to watch that alone. I don't know. We'll see how it ends up panning out. I mean, maybe it becomes very normal. Nano Banana's already changing architectural rendering. Gotta love it. I'm concerned about world leaders being deceived. This is another reason for Ethereum. Absolutely. Identity on blockchain is very important. And we're going to need to tie videos to messages, letters, emails, everything to blockchain to guarantee that those are, you know, real and verifiable. Okay. We're not getting through stories nearly fast enough. Oh, there were some comments from Amit earlier today talking about how Gemini app now has ads. It does not have ads. There was a DeepMind or a guy at Google DeepMind that ended up coming out saying, this is not an ad. We don't have ads on the Gemini app. It's a link to the source that the model originally referenced as part of its content. So yeah. They have not started getting into ads on AI just yet. They are absolutely going to come. They will. Just not right now. Do you think Dan Ives' token he supports has a real use case? Does it have a real use case? Sure. Am I going to go scan my eyeball? No. I don't think that's the way to do it. But I don't know. Literally, if it was someone else, maybe I'd trust it more. But the fact that it's Sam Altman freaks me out. I think it was, data-driven investing that said it first, but he gives me some Lex Luthor vibes, Sam Altman. Like, tech genius, villain. I don't know. I'm okay with the amount that I use OpenAI and trust him with my life already, as it is, let alone scanning and having my identity or whatever. Data-driven investing ended up taking a look at SoFi and just realizing how unbelievably conservative they're being on their earnings. This is another reason why I potentially want to trim hood or something like this to put it into SoFi, increase my position, because not only have I just made it, I've made a great return on Robinhood. Actually, some purchases that I've made on Robinhood are now, more than 10x during the yen carry trade. We were able to get shares in the $14 ranges. That's now 10x. Okay. I can't say the same for SoFi. I didn't get any shares at $2.50. So that doesn't mean that SoFi needs to be at 10x. I'm not even suggesting that at all. But have they run up for the amount that they are expected to beat by? Who knows? Now, he ended up showing off that the updated guidance, and this is before dilution, by the way, before they diluted, which is going to accelerate growth even more. They said, hey, we're probably going to see 30% growth or 3.375 billion. Okay. Now he puts it so great. He says that means that they need $873 million in each Q3 and Q4. Last quarter, they did 858 million. You're expecting them to grow by just an inch and then stay flat another quarter, even with 3 rate cuts during that exact same time period, with what we're seeing, the highest website traffic, the highest amount of Trustpilot growths, app downloads being the highest, amazing rankings on those app rankings. I don't know. I think we're going to see a stupendous quarter from SoFi. I think we're going to see a really, really great quarter from Robinhood as well. But like whenever I look at SoFi and I do all my own math on SoFi, I'm guiding it out. What I end up seeing is that SoFi's analysts place it here. And I think their quarter is going to come way above. I mean, the highest person on SoFi, my numbers are above by a good margin. Robinhood's analysts, I'm sort of right in the upper high end, but there are analysts that are more bullish than me for Q3 of 2025. Now, that means I could be wrong, right? But so far, I've been pretty consistent on my ability to not only predict SoFi, but also be wrong, but only to one direction, to the upside. They consistently beat my expectations on earnings, even whenever I feel like I'm being too bullish. And Robinhood also ends up doing very well. But yeah, I don't know. I think there's definitely starting to create some room now that Robinhood has run up so much to suggest that maybe SoFi going forward could outperform, maybe the next 12 months or so. Who knows? FICO deep dive? I could. Yeah, I don't know. SoFi is an S&P 500 play too. Don't forget, big bucks. Yeah, yeah. I mean, the move that Robinhood has recently seen might end up happening on SoFi one day. Um, why is an ETH bull supporting it if ETH supposedly does the same thing? What are you talking about? Supporting what? You tell me. Um. Okay. Capital One was really the first SoFi and the best, in my opinion, of banks, and SoFi for fintechs, best rates, service, and add-ons. You think Capital One? You put SoFi and Capital One in the same bucket? I personally think Capital One preys on people who do not pay attention to their financials. I think they scam people. Um, I think they're on the lower range of customers. I'm not saying they don't help their customers, but they are on the lower range of FICOs and average incomes. I would not place them in the same bucket. I've seen people have Capital One credit cards that you have to pay an annual fee and you get zero benefits back. And they offer it to people that have no, financial literacy in credit card products. And they do that by mailing out to everyone just based on address. Hey, we can have um, a card out to you. What do you call it? We can have a card out to you if you essentially sign here, blah, blah, blah. They're pretty similar. No. Okay. So there are products for upper bound customers for Capital One. I'm not suggesting that you don't have a product that is like that, but they also service, and that's how they got popular, was servicing a much lower rung of customer. SoFi does not do that. And it's not a secured card. No, real credit with an annual fee, with absolutely no perks. It's not a secured card. It is a real card. They do make products like that. Not a fan. No, I don't use margin, Raymond. Let's see. What price would you go all in on BMNR? I don't think I would ever go all in on BMNR. It's just a little too risky for me. But what price would I heavily buy into it? I mean, the answer is under 50 is always a really good price. Under 45, and then under 40, if we ever see that ever again, would be phenomenal. We can see under 40, but we'd be getting around 1 times MNAV during a time where I think Ethereum is going to blow up. To be fair, Robinhood also takes advantage of people with no financial literacy. Where do you draw the line? How so? I'm curious. Because I don't think they're the same. I don't think they're giving people access to credit. I don't think that they're trying to create bad habits or something like this. I think they can offer products that can be dangerous, but there are many disclosures in order to stop that. But yeah. Robinhood has destroyed more lives than Capital One. I would disagree entirely. I cannot imagine that's true. An investing platform where, you know, more so than not, investments go up. Yes, there are degen plays and stuff like this, but credit cards that does not improve anyone's life. I like credit cards. I think that they're useful, but you're not changing anyone's life for the better with a credit card. You know? I mean, maybe some access to credit might be good during bad times or something like this, but I'm sure more people get burnt than not. Western Digital? Anyone? Bro just bought some call options on Western Digital. Anyone talking about Western Digital in here? I don't think that that's a bad play or anything along these lines. To be fair, I think it's from growing pains and bad customer support from stories on Reddit, not by design or on purpose. Yeah, I do think you can definitely get investing wrong and buy, zero DTE options and lose. Like, it's definitely possible to lose a fortune on Robinhood. But I don't think that makes it a bad platform. You can lose it all on SoFi as well. It's just not as popular, For example, prediction markets are an instant reduction to customer wealth, only benefits Hood with no ability for wealth creation. I don't think that they are trying to get people to put, a boatload of money. If you have a couple grand in prediction markets, I think that that's perfectly safe. But I don't think anyone's full porting, prediction markets. I sure hope not. But, trying to get people to buy into managed portfolios or Robinhood strategies or some of these things, like these are great ways to build wealth. Are we comparing the entire platform, or are we just comparing like DraftKings to Capital One and saying, hey, which one's changed more lives? Okay. Tom Lee is really smart because he's copying Saylor. I mean, the treasury strategies worked, How can you hate it? How can you hate it? And I'm a big fan of Ethereum right now. Like, I just see the amount of companies every day that either are building on Ethereum or building on some layer 2 of Ethereum. And I'm like, man, like the Swift network, BlackRock, UBS, Robinhood. Robinhood has some incredibly smart people whenever it comes to crypto. Coinbase has probably some of the best talent in the world whenever it comes to crypto. And they're building on Ethereum. Why is that? Doesn't that make you think? That's not an anti-Saylor comment or anything along these lines. It's more Ethereum versus the other networks. I think what Saylor's doing is great. I'm not anti that at all. I think Bitcoin's an automatic winner. I think there's less chance that Ethereum wins than Bitcoin wins. But if Ethereum does win, it could be a lot bigger than Bitcoin. So I'm going to take that gamble. Jeremy, I think that that's can be a really wise comment. I do worry about some products like credit cards and stuff where like so clearly they're bad choices and yet people can still get burnt by them. So at what point do they know that that harm is coming to the user and they're not doing anything about it? But yeah. So you're saying there's a chance? No, I definitely think Ethereum is in the running to be a huge, huge name. And the treasury company that's making the long bet on the success of that's going to be huge. And I think SBET and all the other names are going to do well. But just the sheer amount of volume that I see on BMNR, it's like it's hard not to give it a premium. Like now you have like BMNU, the 2X, and now the growth in income ETFs. And it's like that amount of volume, being the premium number one name, gives them a high MNAV. Like that just gives them more and more exposure. So yeah, it pays to be number one, I guess. And BMNR is definitely that number one name on the ETH treasury side. Okay. Let's quickly talk about this. I'm going to get more people disliking me on some of my comments. Don't hate me. Don't sue me. Tesla third quarter 2025 production, delivery, and deployment overall looks amazing. Okay. They deployed 12.5 gigawatts of energy storage. They did essentially 481,000 of the Model 3 and Model Ys, the more budget vehicles. And then the Cybertrucks, Model S, and Model X is 15,933 deliveries to a total of 497,000 deliveries. Incredible beat versus what was expected. And people got quite excited. I love that. I do. But I was expecting Q3 to be very good because we knew that October 1st was the end of the $7,500 government benefit. I forget, subsidy? Thank you. But what is Q4 going to do? That's my question. If Q4 does very well and people are buying Tesla in droves after the subsidy is gone, boy, oh boy, is that exciting. That's very exciting. But if they don't, and this was a lot of pulled forward demand because of those subsidies, I think that Tesla stock could head lower in the short term over the next. We'll start to see some data after October 31st, but yeah. Yeah, the EV credit, yeah. Okay. Also, we talked about this yesterday. I am excited, and you guys know me. I'm not like an Apple fanboy or anything, but I am so excited to see what they do on the glasses side. As a native glasses wearer, I want that industry to blow up, you know? So like whenever I see stuff like this from where is it? By the way, it's the 8th straight day in a row where SoFi ended down. or sorry. No, never mind. Sorry. I lie. I thought they ended down, but they started higher than they ended. My bad. So no, they lasted 7 days lower and lower. Today they broke it. My bad. Let's see. Where was that Ray-Bans video? I wanted to show you guys. There was a video showing off the Ray-Bans, the view of what it looks like from the inside of the wearing party for directions. Doesn't that look insane? Go into the Alamo Draft House. Isn't that Austin, Texas? The Alamo? I think it looks great. I cannot wait to see what Apple's going to do. I have this up on my dashboard on the Maserati. Gotta love it. AR, I believe, is a step change in human evolution to manifest imagination into reality. Yeah. I don't have anything to add to that. Do you think that's bullish or bearish? This guy says, is this the guy that got spanked by a Shark Ninja stock? What are you remotely saying? I like Shark Ninja stock. I've not lost $1 on Shark Ninja stock. What do you mean got spanked by it? I love their products. However, having a problem with one of my products that is currently in, they're going to have to give me a new one. I'm not going to judge them on making one bad product. But yeah, no, fan of the stock, still hold it. Haven't lost $1. Not one. No, not X-ray specs. That's never going to happen. It went down 20%. You lost dollars. Just because you're going to the peak of a company and then drawing it down does not mean that I bought it during that peak. I bought it during the tariff situation with Trump like a few months ago. That's like going to like, I don't know, BMNR and being like, hey, this stock was at 300 or something, or what was it at? Was it at 300, like 1/3? What was BMNR at? Look, guys, look how much money I've lost on BMNR. Look at this. Look at all the people who are little weenie crybabies in the chat that have lost so much money on BMNR. You bought here. That's what he's saying. You bought here. What are you talking about? You can all of my bot. You could just go into my live stream whenever I did a Shark Ninja video. You can see exactly the price whenever I said that I bought it. Yeah. Here, wait 1 sec. Yeah. Like, literally look at this. Look. This is Shark Ninja. He's saying, hey, it was 120. You bought here. No, I couldn't possibly have bought in any of this. It's like perfectly averaged over the full year. And he's like, no, you bought up here and now it's down here. You've lost money. Bro, why didn't you bring up skills? Like I lost like a fortune on skills. You don't even know how to insult me. I got to help you. Arthur, you must be the guy that picks stocks perfectly. Are you the guy with the 100% record? I'm not the guy, you know? So I got to wait a little longer for some names. I mean, that's perfectly fine. But you're the guy that's never missed. And the second you buy, that was the bottom, and then it only goes up from there. I'm not remotely worried about my Shark Ninja purchase, which first off, let me go to my thing. I'll tell you the exact percentage that it's in my portfolio. It is 0.11% of my portfolio. So yeah, I lost a lot of money. Good work, Arthur. Yeah. Guess what my average price is on Shark Ninja? 93.73. I'm up 7.9%. It's the smallest position in my portfolio. People are coming for me today. Okay. How long are you going to spend dunking on this one dude? I don't know. I'm over it. Okay. Let's go ahead and quickly talk about really quick, actually. dLocal and XanderPay partner to simplify and modernize cross-border hotel payments across Africa, Asia, and Latin America. This collaboration spans 13 key emerging markets, including Argentina, Brazil, Chile, China, Colombia, India, Mexico, Morocco, Panama, Peru, Saudi Arabia, Thailand, and Uruguay. All I keep seeing from dLocal is more and more partnerships, new deals with crypto companies, stablecoin businesses, Google, more entry into new markets. Africa hasn't been super good, but I think overall they will do Panama. How do you say it? I don't know. I say, yeah, he did get me with the rage bait. I got. What? No, you're not going to get strength. I don't say whatever he says. I say strength. I speak English. Okay. Panama. Panama? What are you supposed to say? Panama? I don't know, guys. There's weird energies in the room. I'm all heated coming into this. You know what? I saw this too. You guys tell me if you guys like this. A16Z ended up posting top 50 apps of where companies are spending on AI. How interesting is this? OpenAI and Anthropic 1 and 2. Isn't that crazy? Companies like 11 Labs and Cursor 5 and 6. Notion number 10. Wow. Canva number 17. I guess these are pretty common. Grammarly 32. We have so much more to go. Opus Clips. Wow. Yeah, CapCut there. That's ByteDance. We have so much more to go if things like Notion's making it to 10th or Grammarly is on this list at all. Like, these are such basic products today. Midjourney's there. Honestly, the main two are really, and Replit are really the only ones that like not deserve to be there. Like Perplexity's there, but like, I mean, come on. Overall, this list of 50 names will, I think, soon be 50 very recognizable names. Oh, Manus was on there too. Cognition. We didn't talk about those, but those are also very big. Do enterprises use Notion? Yeah. Yeah, mostly enterprises. That's how they make money, right? So, Notion is like a $17 billion company now, I think, in one of their last raises. Hey, Tanner, do you play WoW? No. Real G's move in silence like lasagna. That goes too hard. Okay. SoFi releasing earnings in AM. I like that. It's always been in the morning. What I'm really happy about is that Robinhood, SoFi, and what I assume will also be PayPal is not going to be reporting like back-to-back days, which has always been the case. And I'm just happy that they're breaking it up so then I can actually do an earnings day separately for all of those names because they're all really important. Like, as much as I'm not participating in PayPal right now, it doesn't mean that I won't ever. And I still like to follow that name closely. So I don't like whenever they report on the exact same time as SoFi and we have to pick. And it also meant that like Roy couldn't join us last time because he was really focused on, yeah. Sorry, it's not that I don't think Canva is huge. It's just whenever I think that of them as being AI spend, how does that make sense? I mean, what? Because they have a few AI products? Why am I muted? You're not muted. You just haven't said a thing. I didn't even mute Arthur. Like, I really don't ban people in this chat. Unless you say something like absolutely derogatory, in which, yeah. I mean, we got to do some moderation in chat. We can't be out here being just crazy. I appreciate you answering my question in an intelligent way. MD, what did I answer? Any commodities investments, Tanner? Gold, silver, copper, uranium, oil, gas, etc. I don't currently. I don't think, no. Unless you want to call, Ethereum or something like this, sort of like gold. Maybe Bitcoin's the digital gold. No, I'm kidding. No, I've had gold investments in the past, along with like oil and gas plays, stuff like this, but I don't currently. Yeah, the silicon for sure. I'm investing in silicon. Yeah, that's such a good answer. Yeah. Man, honestly though, I can't get enough of the semis, man. It's just so unreal. I think that artificial intelligence is by far going to be like the biggest change our world has ever seen. The only thing that I'm contemplating constantly is whether we're going to have a moment between the hype that we're in and the tools actually being built. And maybe I'm thinking that build out happens in 2 years. Maybe that build out takes 6, 8, 10 years. And in that time, capital expenditures could slow down. Like, there could definitely be a slowdown in AI. And then we get like a .com level bust. But the .com bubble did not confirm that the internet was fake. So clearly that was not true. Like, we got to see like how do you say it? Like the early stages of such a real industry, but it was just way too early. Is that the case here in AI? Right now, it doesn't seem like that from the hyperscalers. Like we're still just making a ton of money, or they are making a ton of money. But maybe a lot of these startup companies are the companies that are actually going to go bust. So I don't know. I'm still just keeping an eye out. Yeah, I wasn't even around, but like I was still, getting my diaper changed whenever the .com bubble was, or I don't really know. I don't honestly. I don't even know how long kids are supposed to be in diapers. Is that funny? Like, I don't have kids. I never had any younger siblings or anything. I've never been around children in my entire life. I've always been like the youngest person. I've got no clue about kids at all. So, how long do you stay in diapers for? Is it like a year? Is it like 2 years or is it like 4 years? Like I've got no clue. I'm 27 right now. I'm going to be 28 this month. Um, there's the only I've got a cat and a dog. Yeah, that's not what I was trying to state. But all I'm saying is, what was I going to say? During the sort of 96 to 2000, I so clearly don't have any recognition of. Yeah, me and Amit are literally, I think, 10 days apart. Same age, same year, 10 days apart. I'm the 17th. I think he's the 27th, something along those lines, and that's it. Bruh is 27 until the last day. Yeah, that's how age works, dude. Yeah. Yes, I am. You're like, look at me. You're like, look at bruh over there being crazy. No, man, that's just how age works. Usually around 2.5 to 3. All right. Yeah. So, I mean, in the 2000s, like not 2000s, but in the year 2000, I'm probably just getting out of diapers. Crazy to think. I'm sure a lot of you guys that are, 40 plus have, like, you remember where you were during those moments. I don't even remember 9/11. It's not even it's not a memory for me because I was 4. Who's richer, you or Amit? I don't know. We don't talk about it. Um Okay, let's see. Does that put things into perspective? Yeah. No, it's pretty early to get into markets. Like it was 2015 whenever I got into markets. It was the day I turned 18 whenever I bought my first stock. So I got started early. And there's some people in chat that are in here that are, watching my videos constantly that were younger than me whenever I first started. And instead of going and hanging out with friends or doing something like this, they're trying to learn about investing and improve their future. I just think it's insane. Um Definitely allocated my funds thanks to you. Timothy, I hope you made a fortune, man. It's hard not to these days in this type of market. But now we need to make sure that we, if there is any problems, that we get out scot-free. Because even in very, very bullish markets, people can get a little overly excited. So it's important to have that, second guessing, or not second guessing, but like just making sure that you are keeping an eye out for other pieces of criticism. My first stock went to zero. I used loaned money and lost the lot. No. Gosh. Yeah. I started investing at 24. Man, I was a financial advisor for 5.5 years. 24 is still super early to start investing. Like, obviously, you want to try to, start as early as possible. But there were many people that I was talking to that, got involved in markets much later than that. Listening to the signal from Amit and Tanner will help make you rich. And just always do your own homework and remember, only you make the buy or sell. I think, Amit and I are very aware that like the picks have been phenomenal, but also it doesn't mean that it's going to be that way forever. Like obviously we try to do more and more due diligence, increase the amount of work that we do to, make sure the picks that we have are working, but it doesn't guarantee. Like, things can just go wrong in investing. You can bet in the right sector, right everything, and then who knows what happens to management, makes the wrong call. They take a right when they were supposed to go left. Like, who knows? So, things have been great lately, and people are making life-changing amounts of money, and it's unbelievable. Don't bet on me to be some lottery ticket. I'm not an oracle. I'm not a fortune teller. I'm just trying my best. Well, exactly, right? Like, phenomenal picks in a bull market? No way. Well, you know what? I'll give myself some credit. Some of the picks that we've made have been unreal during a bull market. But yes, picking good stocks in a bull market, it's not uncommon. But I wouldn't say it's quite easy to bet on the Nvidias and Robinhoods and SoFis and Nubanks and Google and all of these names during a bull market. I mean, I'm going to give myself a little pat on the back. But I did pick things other people have picked. It's for sure. But that's the thing. You don't get paid more for being the only person that picked a name. Why are you not worried about blockchain technology for payment companies? Because it still requires a centralized business to turn that into a user experience and add actual tools onto it and, connect it to other financial services. So it still requires businesses that connect it all. There's no KYC for blockchain. There's no like that sort of stuff. So humans are still going to play a big role in that, and like payment companies are still going to play a big role in products like KYC. Um, When do you sell completely a stock? I think that you sell a stock completely whenever it's no longer doing what you'd hope it to do, or there's something better that you would want, or you need money for something. Like if you want to buy a house or something, like you can't live in a stock. So if that's all the money you have, maybe you need to go live somewhere. I don't know. If, for example, you bought a company, you thought it was going to have a certain thesis, they were going to be the next generation, whatever, and then they end up pivoting their story and pivoting and pivoting and pivoting, it's probably a sign that they don't have much, and probably need to sell out of that. I don't know. I need to see real examples. It's hard to sort of create a theme in my head to tell you why to sell. Random question. How much does Tesla drop if Elon passes away? I honestly think like 70, 80%. Like, I don't know if Tesla is Tesla without Elon. Did you ever start a position? Not only did I start a position, Logan, I bought more today. As early as today. Yes, I did answer the question in the title. It's mainly the first 30 minutes of the video. The first 30 minutes I was talking about quite the run-up in Robinhood and how I'm not looking to take profits right now, but it's definitely more in my sights at 145 than it was at 100. It's quite the run-up in a short period of time. I absolutely no, not even a little bit did I've never bought one share of GameStop or AMC. Not one. It's the same reason why I'm not buying. I think the people who participated in the GameStop AMC stuff are the types of people who are investing in Open Door and other names like this. They're more sentiment driven. You can make an absolute fortune doing that. I'm not even suggesting that it's a bad investment style, but I think it takes a certain type of investment style, and I don't have that style. If Hood falls, when do I re-enter? I don't know. I don't know. Lower than where you sold out at? I don't know. Are you a quantum bear? I'm not. I guess you could call me a quantum bear. I'm definitely not buying any quantum names. I'm not anti-quantum. I'm not betting against quantum. I think the technology clearly is real. I just don't know how, is it commercializable at all? Is there a real business here? Do I believe in things like the quantum internet stack and stuff like this that people float around? Not in the slightest. I've tweeted about this a couple times, but just look at what Elon is doing in terms of the breakthrough technologies that he invests not only a single company, but many of his different companies in. That can be, a really great way to gauge if something's going to be a breakthrough technology. Elon is actively pouring hundreds of billions of dollars into GPUs for XAI and Tesla and all of his other businesses, right? Which, if the IonQ CEOs and stuff like this are correct, will be completely obsolete in the next year in a bit. Like by 2027, Blackwell GPUs will be completely obsolete. Well, if he's going to stand up Colossus 2, a brand new, essentially gigawatt data center and more data centers after that, like that, it'll all be wasted capital at the thought of quantum computers being able to blow those away. The fact that he's not making those investments questions the actual product that is quantum. Now, do I think it's real? Do I think they're solving extreme math problems? Sure. Elon needs GPU for his anime GF. Yeah, but why doesn't he need? Isn't the whole idea that maybe one day a QPU will be able to create those anime GFs? Isn't that what people are betting on? Do you agree with Amit's thesis on Grab? Amit is going to give me the full thesis on Grab on Friday. This Friday, he's going to pitch me the name. So we'll see. What would make you sell your Nvidia position? If quantum's real. Or if there's a slowdown in CapEx. If there's some unbelievable investment. I think what I'm going to do going forward, especially if we do end up seeing a dip, is I'm going to go heavier into names that I believe in. I don't want to have, 18 different names. I want fewer and fewer names and go much heavier in those names. Nvidia, I think, is extremely cheap and will just be such a stable position in my portfolio. But is that deserving of, 50% whenever there might be other names that might return more at the same level of risk? I don't know. This is me just thinking off the top of my head. Obviously, I have a lot of things to think about whenever it comes to my positions. I'm sure Nvidia can can easily move into quantum if they need to. I don't know if it's as easy as that, but yeah, they are definitely not ignoring quantum. Jensen's giving them some bit of attention. Google's cheap too, and it's been returning more than Nvidia over the past 5 months. Yeah, I know, but that's on a stock perspective, not on a fundamental perspective. So if you think that Nvidia is going to have essentially a 50% CAGR, keep market share, and grow at the speed at which AI is growing at, then Nvidia is going to blow away Google. But I'm not anti on Google at all. I mean, I've got a share of Google as well that's grown pretty sizable over the last few months. I wasn't into Grab, then watched a clip of the CEO, loved him, and immediately bought a little. Yeah, I mean, maybe that's going to be the case. I did watch Chris Patel came on the channel a while ago, ended up showing me a video of him. I thought it was okay. I'm not anti him. He seems like a very competent CEO. But then I don't know what the growth rates were or are now, but at the time it was like 17%. The margins were okay. I was just looking at Nubank and looking at these, both being these sort of international fintech plays that are breaking out of financial services, doing other, well, Grab's sort of breaking into financial services. Nubank is breaking out of financial services. But that was growing at like 40% and Grab was growing at like 17% at the time. I was like, they're essentially the same multiple. One is doing it in way better. So I just thought whatever amount of dollars that I put into Grab, I'd just double down on and new. And to be fair, pick any point in Grab's history. It's worked out in my favor for picking Nubank. Have you checked the ETH validator queue lately? Yes, I saw quite the time delay for exits and stuff. I did see the large spike up. I don't know exactly what to take from that, but to me, that just spells demand. No? like just a sheer amount of demand, more so than what we've seen previously. Okay. The problem with quantum is they don't understand how it fundamentally works, nor do I. Okay. Fun question. Best value stock to buy that's under $10 that you would pick up. So first off, I've never understood the point of buying a company at a certain share price. Like, I'm starting to buy lots of D local. It's like $14 right now. I also buy Mercado Libre. That's at like 2,100 right now. Percentage matters, right? How much you think it's going to grow. And no matter how much people think a $5 stock can get to 10 very quickly, that does not make any more sense than a $2,000 or a $20,000 stock going to 40,000. It matters how large the market cap is, how fast the change of the business is fundamentally, like all that stuff. Many of you guys already understand that. I hope almost all of you, but I don't know. I don't know if I follow any stocks really that are under $10 a share. Yeah, that's true. That's true. But I don't buy stocks specifically based on if I can sell options on them. I only do that if I can after I've gotten interested in it. Yeah, but I'd much rather just get a better position. Like, it feels weird saying this because Mercado Libre has seen a drawdown recently. So now we're at 2250. But like, I bought that stock at like 1200. I'd much rather buy a company that goes from 1200 to like 2400 than, buy a name and try to make a small dividend on that name over time. So if I can find a name that is going up a ton and I can make that premium on, great. But it's not the end all be all for me. What happened to your covered calls on Nvidia? Nothing. I don't currently have any what do you call it? Covered calls outstanding right now. All of the ones that I had ended up closing last Friday. Or maybe it was even the Friday before that. I have not wrote anything since. I'd wait for SoFi to go higher. I'm probably going to write some covered calls on Hood while it's up. I know that it's obviously ran so much and closed out a lot of people's covered calls. I just can't imagine this type of move continuing. On what news? On whose authority? It's absolutely crazy now. So I would write some covered calls on Robinhood here. Unfortunately, the premium is just not as good as some of the other names that we write on, though. Or sell on, sorry. I know you guys correct me on that, but yeah. Is BMNR still a good buy? If you think that Ethereum is going to continue to grow, I think that could, be a very good buy. But if you hate volatility, if you're worried about the stock falling $10+ a share, don't touch it. If you're buying long and you can hold through that volatility, it could still be a very good price if you think Ethereum's going to 10,000, 15,000. Why is Hood going higher? Well, I think mainly right now it's just institutionals buying and following S&P 500 ads. Nvidia AI chip deal with UAE stalls, frustrating CEO Jensen Huang and Trump officials. Yeah, is that humane? That's a 0.5 gigawatt data center deal that's supposed to be closing out for GB300s this year. Let's see what the market thinks. Actually, we're up. we're slightly up in after hours, but starting to turn a little sour in the last few minutes. Cactus Jack with the news source. ETH is up 10%, or sorry, is 10% from all-time highs. So whenever I did my video today, yeah, we were at 44.55. We're now at 44.70. Wow, we actually broke 500 not long ago, or 4,500, sorry. But yeah, it's been a good last couple of days, eh? I know when the S&P 5 or SoFi will enter the S&P 500. Like I would shake on it. Okay, promise you guys. When it happens, I don't know. Do you have Legend in Canada? No, not only do I not have Robinhood Legend, I don't have any form of Robinhood in Canada. Cactus Jack is the Bloomberg terminal. SoFi ended up dropping, and correct, I'm going off memory here, but there was some sort of report from Fitch Ratings, the credit agency, that reported that previous vintages had higher than expected loss rates. And so they had gone back into previous vintages and said, hey, these weren't as good as what we thought. But they were like 2023 and some of them were 2024 vintages. But SoFi had already reported on this 12 months ago, like 18 months ago, and said, hey, these vintages are performing worse than we thought. And so we've cut off the channel in which we were acquiring those new customers. So all of that is completely old information. The vintages are old. The way that we acquire those customers are old, everything. But it was not great news. But yeah. All right. Ladies and gentlemen, thank you all so much for watching, guys. Really do appreciate your time. Love that we can all come here as a community. It's unbelievable. It's a little surreal looking at the amount of gains that not only people have made last year, but this year as well. It's life-changing for me. I'm sure it's life-changing for you guys as well. I'm just glad that we can all do this and, everyone gets to win. It's not like, my wins are your losses or something like this. It's just phenomenal. So thank you for giving me your time. Really do appreciate it. But I'm going to go now. Bye for now.